Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 45, Nasdaq's up 14, S&P's are flat. Gold contract down $3.40, traded at $1,297 an ounce. Silver's flat at $20.61 an ounce. You got platinum, $1,479 an ounce. Light sweet crude off a buck at $99.99 a barrel. Bonds are getting smoked out here. You get the 10-year off 24 ticks at 124.20. We'll go over the 10 and the 30. 30's down a point and a half at 137.14. King dollar up 220 ticks at 81.53. That baby 81.50 was screaming it wanted to get tested. I suspect King dollar is going to go a lot higher. Euro down 21 ticks at 133.88, and the yen's trading out there at 102.87. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We're at 1969. The swing low of the 17th of July is 1955. We're going to make that run down in 1955. We've done 1962 thus far today. When we take a look at the volume characteristic, what we have out here, we go to the SPY. What you're going to see with the SPY right now is down 17 cents, and we do have an expansion of volume. Yesterday we did, we did 80 million yesterday. We're at 87 right now. We get 50 minutes left coming into the close. The swing point that it's going after, the SPY, it's going after 195.43. We are going to need another expansion of volume as we get into that. That low there has 145 million shares that were traded on the 17th. Dow Industrials, what do you have with the Dow? She's rolling over. It's a slow roll. The Dow is at 16,867 right now. It is a slow roll. However, what you do have is that you basically roll back a month and a half in all of 6.5 days. Why? Because when we were going up, we were actually a sideways move for almost a month, folks. Then what we did on the 14th of July, you popped higher for a couple weeks, and you can see you only came down 3 days, but yet coming down 3 days brought you all the way back to July 5th. NASDAQ composite first. We take a look at the composite. What we have with the composite is this. Try to get to a higher high. We'll see whether it can hang at this higher high. Right now, the composite's up 14 bucks. And the high in the composite is the 24th of July. That was 4485. We hit 4476. The number for a small failure, we close under 4470, which looks like we're going to do. A larger failure is a close under 4457.95, and right now we're at 4457.23. So I expect you're going to get that. And what that number is, by the way, folks, is the same number that we failed at yesterday. That's what it is. You had the characteristic that we have inside this market right now is that the market opens higher, can't handle it, comes lower, gets a pop intraday, can't handle it, comes lower once again. Gold contract. We go take a look at gold. What we have with gold is this. Gold contract out here has done 118,000 contracts, small move. We're down a couple bucks. There's not enough strength, selling strength in this gold to get this lower. It's coming into the day of strength from the 19th of June, which was 236,000 contracts. Big number. Now, let's go to bonds. Okay, so bond market, the ever-ready bond market. What do we have? We've done 1.6 million shares here. That is no doubt a huge expansion of volume. But what you have also is this, is that your swing point out here is 124.16 to 123.26. That's going to have to get into that baby with 1.3 million contracts. Thus far, we've hit 124.14, which, in fact, was the high of the last low that was generated out there. We'll see whether you get any follow-through with that and see if, in fact, it can come down and hit that. We go take a look at the 30-year. This is what you have with the 30-year. 30-year is down a point and a half. That we've done 476,000 contracts, and she is coming into 420. And she hasn't hit a swing point yet. So the 30-year and the 10-year are going to need another day tomorrow like a day today, okay? So the bottom line is that, you know, I'm in the camp that bonds, prices are going higher, yields are going lower. You know, the pullback today, no doubt, this is on the Fed announcement, and what the announcement was, by the way, it's, you know, status quo, folks. Two-day Federal Reserve meeting, come out that bottom line is that they're going to pull back another $10 billion. Now their bond buying is $25 billion. Each and every month, they told us this months ago, they're going to pull back, excuse me, by $10 billion. They've done it, and that says that the end of the purchase program will come in October. Now, King Dollar. Let's go take a look at King Dollar. King Dollar's been on the move, is on the move. DXU4. What we have with King Dollar is this. She does 29,000 contracts out here today, big numbers. Gets into 81.50, and if I put a continuous contract up here on King Dollar, what you're going to see, I'll bring this back. First, I'm going to just bring it back 2 years on a weekly. What you have is this. This is a crucial number, this 81.50. If we launch this number, which I love how we're coming into this number. We're coming into this number, folks, with force. Wide price spread, accelerated volume. That's how we're coming in. That says that, guess what? You can get up and over this level, and we haven't been up and over this level since September of 2013. You get up and over that level, the dollar's going to make a run to 84.96. That's the way this is shaking out right now. Some of the Dow stocks out here, we had American Express is down 81. We have Caterpillar off $1.43. Caterpillar's getting hit. Oxy is down 122. Inside the, let's just go inside that oil sector. What do you have? Yeah, she's getting hit all over the place. You want to see something that really got took away some gains in a big way is Apache. Apache was up $3 earlier, folks. And this is a test of a high on lighter volume. Apache's trading at 108.92. That high of today was 113. The 113 was testing the 112.79. If you want to see a test, and just it always blows my mind that they can test these things by the penny. Got over it. Closed, well, get over it, and is still going to do lighter volume. This is the thing that's a total mind blower here. Had the expansion on the way up, got over it, going to close underneath it, and it looks to me that we're going to have lighter volume. That is going to send Apache down to the area of 100, and right now it's at 108. We go to the XLE, and you take a look at the XLE. What you have with the XLE, she just has taken... Yeah, she just gave back a month and a half, actually, and she has volume expanding. The swing point, the lower swing point on this is 98.14. We've hit 98.44. Right now we have 8.6 million shares. That swing point has 10 million shares. I expect you're going to go after that swing point tomorrow, and the oil service sector is giving it up. Our phone number is 877-927-6648. We go look inside the NDX 100 and see what we have happening inside the NDX 100. This is what it is. Putting juice into it, you had Amgen. Amgen is up $7. What's that? Charter. C.H. Robinson is up $3.64. You get REG up $16, and Express Scripts is up $3. Taken out of it, you get Garmin is down $3.42. Vertex Pharmaceuticals off $3.74. We have, what is VRSK is off of $153, and Mondelez is down $93. If we go take a look at the 3Qs, what we have with the 3Qs right now. Okay, so 3Qs got to a price point today of $97.32. It's at $96.90 and 96. You kind of love this. This is going to be so cool. So check this out. We're at 96.89, folks. Failure in the 3Qs today is 96.87. A close under that. We take a look at this in a 10-minute. Let's put it up in the 10-minute and see what we have. So 10-minute basis, you got the spike at 14.10. No volume on that spike. It's going to be a close call here. If we can get underneath it. 96.75. Yeah, we can go to 96.75 easy. We only need 2 pennies for failure. 877-927-6648. Give us a call, folks. Come right back.
The past Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now down 32, Nasdaq's up 17, S&P's a flat. Let's go to Peter in Park City. Hey, Peter, what's going on?
Hey, Tommy, how are you?
I'm doing great. You having a good day?
Hey, not that at all. I love the euro. But, hey, I want to give you props because right before you took a few days off, you'd said CYNK. Oh, 1325, God forbid, you better get out. There's something wrong, da-da-da. Sure enough, after the close, SEC shut it down. About a week later, opened at 275 today, low of 25 cents. Just wanted to give you because there was something wrong, and you saw it, and it's like, hopefully people got out. But it was like one of those weird, I mean, if you look at that chart now, it's like, good Lord.
That's wild, man. Well, I appreciate it. That is wild.
No, because you did. You said it. You said it before the market day closed that day. And I just happened to, I'm not as active as I have been in the past, but I heard that and I looked at it, and then I was like, wow, look at this. SEC halted it, and it took probably 10 days before it reopened.
Yeah, this is
and today it hit 25 cents.
No, this is a sick one too. If you want to see, what's so crazy about this, folks? Is this?
You couldn't have shorted it, but
no, and it just has to do with where something takes off from and comes back to. And this is about as sick as you got, okay? Because what ends up happening is it started at 10 cents on the 17th of June, and it goes up to $21.
$21, yeah.
Yeah, on the 10th, and then back to 20 cents. Yeah, I know. It's unreal.
Yeah. Hey, you want to look at the euro real quick? I mean, I talked to Larry today, and I'm like, it's looking 132 at least. And
no, the euro, bottom line is that if we take a look at this, you broke that swing point of 134.77.
Yep.
And, right now, 132.96 we get action. I mean, I think you're going to have some fun here with this euro again, man. I mean, it's trading, it's trading right, number one. So let me see, 139.67.
Oh, you got an ABC to 132.15.
Yeah.
You've got 1.618 to 131.98, and you've got, I want to say it's a 0.618 off of the 127 low to 132.25. So I mean, you've got a huge cluster right there. You do. There's real action here, no doubt. Great to hear from you, man. Breaks that. Hey, man, be good. Enjoy.
Okay, have a great one, man. Have a safe one. Now, folks, let's go over to our man, Mr. Darryl Martin. And don't forget, each and every trading day, Darryl has an outstanding show right here at TFNN, 1 to 2 Eastern Standard Time. He trades the Nadex platform each and every day. And, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You'll see the banner on the top, on the side. You hit this banner. You can bring up the account. They'll put $25,000 of paper money into your account. You can see exactly how dynamic this system is, this exchange is. Darryl has an analyzer that you can come up and test drive once you get that account up and going. And the markets that we have right now, folks, are two-way markets. And on two-way markets, the bottom line is that you have the volatility in place, you have the trading in place. Test drive this Nadex platform, because if we just look at the action out here today, bottom line, with some decent fingers, it wouldn't have really mattered whether you were a bear or a bull. You could have made it on both sides. Darryl Martin, what's going on?
How's it going, man?
I'm doing great, man. You having a good day out there?
Yeah, we did a
you got to be having a good day.
It's FOMC day, man.
Right.
FOMC day and a P day, bring it on.
Right.
So, yeah, we put on a little trade on here, and it worked out well. So we did one on the Diagnostic Trading Hour, my show I do every day.
Yes.
And did a iron condor. So a lot of people may not know what those are. Or if you do know what they are, you may only think you can only do them weekly or, monthly.
Right.
And but on Nadex, you can do them pretty much every hour of the day.
Which is amazing, right.
And so I hopped in on the show, and I was analyzing pound dollar. I was looking at the ranges, the expected ranges, all that stuff. And we had the FOMC coming out and the expected moves in the pricing. And we were basically do a credit spread, where we buy an in-the-money contract on the bottom, and we sold one above it, and the bottom one got full profit. The upper one got about half the profit, and so it worked out well. We expect it to expire somewhere, if you're watching over on Tiger TV, what you can see is you can see my screen up here, and I got pound dollar up on the charts, and we hopped in right at about 6,900. Okay.
Yeah.
And and I needed it to expire below 69.20 and above 68.80.
Okay.
As long as it expired in between those areas, I was definitely going to make some money. And at 2 or 3 o'clock, which is when it expired right at a close of 69.15.
Okay.
So I got full profit on the one I bought, and I got a partial profit on the one I sold, and it basically stayed white with, even the expected ranges didn't really go much outside of that, even with the FOMC announcement. So it worked out really well. I was very pleased.
Oh, no doubt, man. And, what we have out here, folks, is that the volatility, in the currencies is there, the volatility in the market's there, and, it's a two-way market. I mean, that's what it really comes down to. Because when we're talking, whether it's currencies, whether It's the S&Ps. You know, I happen to get the E-mini up on my screen right now. Well, guess what? You know, E-mini went from 1973 down to 1962, okay, 1956, back up to 1971. We're at 64 right now. I mean, that is monster money on both sides of the market, folks, because you don't need a huge amount of movement inside, you know, many of these contracts, depending what contract that you are trading. And
yeah, well, and that's, I mean, to get 20 points on that, you know, down and another 15 on back up, I mean, that's fantastic.
Yeah,
so.
there's no doubt about it, man. Absolutely no doubt about it. And, you know, the volatility, folks, is not going to be stopping anytime soon. What we've had the past 2 days is that you have markets that have opened higher, closed lower. You know, we just talked with Peter from Park City. He was looking at the euro. And, yeah, the euro has been going a lot lower. Dollar's been going a lot higher. But you're going to get these bounces. My longer-term deal is that the dollar wants to go higher, the euro wants to go lower, and there's no reason you can't play both sides of that. And if you are trading currencies, folks, definitely get over and test drive the Nadex platform. It makes no sense to trade currencies outside of that platform, you know.
Exactly.
Yeah.
You can go in there, you can trade the spreads just like you're trading underlying markets.
Right. And you know, what happens if you've ever traded currencies, folks, you know, no matter which side you're on today, you will get stopped out. You know, you're not going to let these currencies run 60 pips either way, which they ran almost 100 pips today. Well, 30, 67, well, yeah, they ran 40 pips. So big numbers, man. No doubt about it.
Yeah. I mean, basically what they are is it's like options for day traders.
Yes.
You know?
Right.
So if you like to get in, you want to get in the market, you want to trade currencies, you want to trade, you know, futures, whatever, then it's like having, you know, regular calls and options.
Yes.
You know, calls and put options. There's vanilla ones.
Yep.
And not the call put binary crap, but, you know, call and put options. And you go in there and you don't have like a week of time decay built in.
Right.
And basically what that means is it's really simple. You don't have a whole lot of time decay. Your spread's going to move fast. Your leverage is going to be low. And I mean, there's a few things to learn, but you know, that's what my show's for, right?
No doubt.
So helps you fill in the gaps there.
And the analyzer makes it tremendously easy, folks. What happens with the analyzer is this. It's not going to tell you to go long or short. What it is going to tell you is that when you decide which way you'd like to go, or you just like to do a strategy, it's going to give you the best math contract in order to do that strategy. Don't forget, folks, every trading day, TFNN starts at 8 in the morning, goes to 6 in the afternoon. You can listen to Darryl every day, 1 to 2. Darryl, you have a great night, safe night. Of course, we look forward to the show tomorrow.
All right, you too.
Stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go over and take a look at a few of these gold stocks. We had the Fed minutes, the Fed statement come out. Bottom line is that these gold stocks just don't want to pull back. If we could take a look at Rango Resources first, GOLD, you've seen it done 369,000 shares out here today. That is coming into 552, so that's going to need a lot more volume in order to get to lower price. We take a look at one of the silver ones, which is PAAS, Pan American Silver. What you have with Pan American Silver, a couple of these silvers, I wouldn't be surprised if silver starts being stronger than gold once again, because a couple of the silver equities are stronger than gold. What PAS has done today, it did 728,000 shares. You're going into 1 million. If we take a look at Heckler, Heckler is trading out here. That's HL. Heckler, yeah, look at this. This is wild. Down 3 pennies, 2.3 million shares, and that's going into 5.3 million shares. So if we actually go over and look at the silver contract, let's see where she is. Okay, so silver contract right now, she's up 6 cents, and we have done 29,000 contracts out here today. That 29,000 is going into 59,000. So silver's going to need a lot more contracts in order to get the lower price. The 29,000 contracts, 59,000 rather, the low there is 20.35. We've hit 20.48 today. We're at 20.65 right now. Let's go to the TLT. We don't get the TLT since these bonds are getting smoked. The TLT. So what do you have with the TLT out here today? It's down, and the TLT, folks, is the Treasury 20-plus bond fund ETF. That's down $1.64 today. It's done 10 million shares. And what we have here with the 10 million shares, she's going into a 10.9 million share day. Now, what's really cool about this is this. So, the technical aspect, to me, the technical aspect is bonds wants to go higher. The fundamental aspect on a continual basis, people just can't believe that yields can get lower. If we stay with the technical for a second, this is what you have. We've been up at these levels, in fact, we've been over these levels since May 15th. Of 2014. What we've done today, you're down with volume, expansion of volume. You're not at a swing point, however, and this is where the kicker comes in, though. This is what's really cool. You're going to have another expansion with volume as you get into 112.56. The reason being is this. So we're down with 10 million shares. Well, folks, what this needs in order to even get to a swing point and break a swing point is over 14 million shares. What happens is that when you have energy in the marketplace, whether it's energy on the way up or energy on the way down, what you don't want to see, well, here, I'll set the bull and bear scenario here. The bull scenario would have been today that you're basically pulling back in the, well, let's say today they got exactly what they want, meaning the bears got exactly what they want. What they would need tomorrow is that they would need lower prices in the TLT and in the 10-year and the 30-year and another expansion with volume. We'll see whether we get it or not. I suspect we're not going to get it. If, in fact, you got it, in the 30-year, that would still not break the market. Why? Because the highest volume is so much lower. And what ends up happening with a marathon is that it would have to accelerate again and again versus building cause. So if you're a bear out there, what you actually want to see is that you want to see 3 or 4 days of sideways movement the next few days. Then it would be going after the swing point from June 19th. If you're a bull, what you have is that you want to see this basically get lower tomorrow. You could actually try to get into this 112.5, 113 area. You get a contraction with lower volume, rejection of the high, of the low, and then guess what? That means that you go back into a consolidation. The charts themselves would have to build some cause for a certain amount of time. Why? Because when you do have a day like today, you come down hard, you come down fast, you have to rebuild that whole area right there. The 10-year right now, what we've done is that it's gone from 125.13 to 124.14. That's a big move, no doubt. It's given it back. But what we haven't done, this is what's absolutely amazing, we have not hit the swing low. And the swing points, folks, are where market talks, walks, and squawks. Let's go over to Apple. Apple's been trying to push into the high, hasn't been able to hit it yet. We'll see at the end of this week where Apple's standing. The reason why we're saying the end of this week, what you do have is that the high in Apple is 100.72. The low of that high is 99.08. So what we've already done thus far is that we've already tested the low of the high. Volume-wise right now, on a weekly basis, what we have is 128 million. And at 128 million, it's setting up that it will not do 500 million. So if, in fact, we get that, what you're going to see is that we're going to go into it. It's already rejected price, and we'll have lighter volume. That'll be a failure on Apple. Let's go to Dave in Clearwater. Hey, Dave, what's going on?
Hey, Tom. How are we doing today?
I'm doing great, man. You having a good day?
Dude, this has been wild, man.
Yeah, it has.
It's been a wild one in the bond market in a huge way.
It has.
In a huge, huge way. I got a question for you. I'm kind of joining the program a little bit late here.
Okay.
I listened to the Fed announcement.
Yep.
And, the normal double speak. And, they spoke kind of, to cut to the chase, they spoke about continued slack in the labor markets. And basically it's, kind of a slight contradiction from a couple statements that were made earlier. So my question to you is this. When the Fed double speak aside, when you look at the bonds, in light of the GDP report today, in light of the acceleration we're seeing in inflation, it looks to me, Tom, like to some extent the markets are factoring in a interest rate hike sooner rather than later, and they're not really buying the Fed's statement. Is that your take from looking at the action today?
Not really, because we're not even at a swing point. When you look at the 10 or the 30 year, it needs a lot more volume to break these last swing point. The 10 years 123.25, and if you want to see the correlation quickly, I just went to the TLT. It's going to take a huge amount of energy just to get into the highs of the swing point on the 19th. That high there is still 112.56, man. That's a long way down. We can do it tomorrow, but that's 14.2 million.
Yeah, no, it'll definitely, we would have to see a follow-through. And I'm just talking about not just in a, like today, tomorrow, next week, or next month. I was just, I was looking at it, I was like, man, I can make a case for why the bonds, want to go higher. But then I started thinking about it today, and I said to myself, inflation's starting to pick up. I personally believe the economy is doing better than, a lot of the talking heads on the TV would have you believe. And it looks with inflation starting to pick up a little bit, at some point in time, I don't think it would kill the economy to go from 25 basis points to 50 on the Fed funds rate.
No, I absolutely agree with you. I agree with you, all of that. Where the aspect comes, I think, with bonds is as to what is the competition, and that's the big deal, So it's like it's a supply and demand equation, And the bottom line is that there's still plenty of folks that, every single time. This is what cracks me up, folks. Okay, this is what you really want to wrap your head around to a certain point. You hear on a continual basis, CNBC, Bloomberg, you don't make money in bonds. It's like,
that says who?
Folks, the bond market has been the biggest bull market in history. There's been more money made in bonds than anything, and including this year, by the way. Okay, including this year. Okay, so I don't know how they even know. What evidently happens is that every time someone's on there saying it, they're not. They don't have someone else on the other side that ever traded bonds in their life, evidently.
Yeah, look at Mr. Gross's palace there in California and tell him you can't make
I mean, forget it.
That's ridiculous.
It is ridiculous, and it's ridiculous even this year. So watch, and what we're talking about, folks, is this. If we just look at the 10-year this year, well, you look at an aspect. Let's see here. I'll pull the 30 up instead because I can pull the continuous contract up easier. But if we take a look at that, what you're going to see is that the 30-year, has gone from 132 to 137. That's big money in the bond market, folks. And you get your interest. So they're getting the expansion in the price, the principal price, and the expansion and the interest. And now what I'm talking here too, by the way, is not bond funds. You don't want to get your head wrapped around bond funds, because the bottom line is that when bonds do go up, and they will go up, okay, meaning interest rates, well, bond funds will get killed because they got to turn them over instead of just basically collecting their interest plus their par. Cooking, brother.
Thanks, Tom.
Dave, have a great one, man. Have a safe one. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Right now, we have the Dow down 28, Nasdaq's up 22, S&Ps are up 2.5. Don't forget, folks, at TFNN, every trading day, we start our programming at 8 a.m. Eastern Standard Time. We go from 8 to 6 o'clock. All live content programming. We actually stream 24 hours a day. You can get all that programming right on your cell phone at tfnn.mobi. If you'd like to get Tiger TV, folks, just go to tfnn.com. You can see the TV right on the right-hand side. You can see the programming. Just hit that button, get Tiger TV with the charts, with the audio, with the video. And if you do enjoy Tiger TV, folks, please tell 3 people. We really appreciate it. Some of the Dow stocks out here. What do we have? You have Boeing is flat. Right now, American Express is off 69 cents. American Express came out with their numbers last night. You have Oxy down 103. GE's up 21. You got Honeywell up 31. United Technologies is down $1.04. We'll go over to United Technologies and we look at this for a bit because United Technologies has been basically taking a beating, folks. That's UTX. And she has, let's see, come on, baby, come on up here. Bottom line, United Technologies and General Electric have taken a heavy beating. Now, this is what you want to wrap your head around with United Technologies, and this is what it is. The benchmark that the indices want to trade to right now is February 5th. What is February 5th? February 5th, folks, is a high-volume day that hasn't been tested. And the S&Ps, you're talking a big number here. We're talking, bottom line is that a couple hundred points down. On the SPX, the February 5th low, we're at 1971, is 1737. 1839. Oh, that's 235 points. Big number. So why are we over at United Technologies looking at United Technologies? Well, many of these large caps, the NASDAQ stocks, have these high volume lows. And United Technologies' case, it is 107. Well, what do we do today? 106.31. That's the first thing we did. What's the volume characteristic? The volume characteristic right now, folks, is 5.5 versus 6.8. That's how we're hitting it. That's on the daily. Now, what you want to look at when you're doing this is that you want to go from the daily, then you want to go to the weekly. So if I take this up and I put this on a weekly, what are we looking at? This is what we're looking at on the weekly. The weekly had 29 million shares traded. Now, this is screaming that it wants to go lower. And watch how this is set up, because this was screaming last week. So the swing point out there has 29 million. Last week, coming down to it, you did 33 million. This week thus far, we've done 16 million. So you can see what's going on. You get 16 million in 2 days, right? Bottom line, your odds are that you're going to break the 29 million. You're 16, 16 is 32. And then we have 3 trading days left, not 2. Oh, actually, no. Okay, no. Oh, this is interesting. No, it's Wednesday here. Okay, so hold it. So that's 16. That means 25. Oh, no. Okay, so the bottom line is that you can commit to the 107 with lighter volume because we can do 25 million versus 29. So we'll see how that shakes out. We'll see where the whole price. My take is that this United Technologies is going down to $83. It's a big number on the way down. GE, we take a look at GE. GE is going to be an equity you want to keep your eye on. GE is building cars to get down to the 5th area, which is 24.32. There's 3M. Let's go take a 3M now. 3M just started to crack off the highs. 3M had tested its high. Third time it tested the high out here since June 6th. You're down 24 cents today. Not that's a lot, but she's at the lower end of her range. That's how this is shaking out right now. American Express, AXP, she came out with numbers last night. That has held price pretty good today. We hit a low of 90.04. It's up a point from then, but this had expansion of volume as it's getting a lower price. What does that set up? That sets up a return to lower price. Amazon, we go over to Amazon. We take a look at Amazon. She is flat out here today. Big Blue. What do we have with Big Blue? IBM sideways move, no action in there. If we take a look at the Dow Industrials, what's moving the Dow, MDU. What we have is that on the way up, you have Nike is up $1.50. Disney is up $1. You have Home Depot up 84 cents. GE's up 21. Taken away on the way down, you have Coca-Cola off 68. Pfizer's down 21. United Healthcare is off 133. And Caterpillar's down 129. We do look at the Caterpillar. We take a look at Caterpillar. She's making her way into the lower price also. Caterpillar gapped off the high of 111. You're at 103. And the way that baby is set up is that lower price looks like it's going to be coming at us. Google. Let's go take a look at Google. Google is trading at $5.95. It's up a couple bucks out here today. She's still in a consolidation. She hasn't broken apart yet. I do expect she's tested her high from July 18th. She hasn't tested the high from the 26th. I don't see that baby getting tested. Why? Because what we have out here, folks, is that if we look at the markets, it's a slow roll to the downside. If you go over to the FTSE in London, FTSE also couldn't handle price. DAX in Germany, that likes to trade like the NASDAQ, also couldn't handle price. And what you do have with the DAX is the DAX finally got back inside her lower range. That lower range got back inside. It's 97.08. We're at 95.93. And what that sets up is a test of the March 14th swing low. Now, what's intriguing about the DAX and the NASDAQ is this. Benchmark is February 5th. Both the NASDAQ composite had broken that with volume. The DAX broke it with volume. And both of those indices, folks, said, see, you don't want to be here until lower prices. Got over the high once again. Did it with lighter volume once again. Both of them are giving it up. What you're going to see as we get down into those levels, that's your benchmark. We'll see whether we get an expansion of volume or not and take those out. The way that a couple of these equities that are hitting the benchmark now are hitting it with good volume, not too much volume yet, but good volume. And what that sets up is that sets up lower prices coming at us. The rotation of how you get down there is really intriguing, folks. Pay attention to it. Why to pay attention to it? Because if these large caps continue to get under the February 5th level, what that would be saying is that the S&P is going to make its way down there, number one. And as I said a little bit earlier, that's 240 points from where we are right now. That's big, big numbers. That's the first part. Second part is that time-wise, we're set up time-wise going into August, September, October, farthest pullback, farthest correction happening. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow right now is finishing up down 29. Nasdaq's up 20. S&Ps are up 2. We're going to be right back, folks. Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Christian Larson. Live in faith that the whole world is on your side so long as you are true to the best that you can be. Market-wise, let's take a look at it out here. We have the Dow Industrials down 31, NASDAQ up 20, S&P's up $1.50. Gold contract down $2.20, trading at $1,298 an ounce. Silver up 8 cents at $20.66 an ounce. Gold, platinum rather, flat at $1,479 an ounce. Copper up 2 pennies at $3.24 a pound. Light sweet crude off $1.30, trading out at $99.67 a barrel. Bonds, we had the 10-year down 23 ticks at 124.21 with an expansion of volume. Not enough, but you had an expansion. We'll bisect and dissect that bond market ASAP. The 30-year off 1.5 points at 137.15. King dollar up 200 ticks at trading at 81.52. We have the euro down 16 at 133.95, and the yen is trading up 75 ticks at 102.87. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, what do you have? You have a lower price, folks. We got a sideways move. Bottom line, you hit a low out here in the cash of 1962, and you had a slight expansion of volume. We did 675 million versus 627. You want to take a look at the correlation inside the SPY. This is what we have in the SPY. The SPY out here closed flat, up 3 pennies actually, with 102 million shares traded. The 102 million shares, folks, was going into the swing from 2 days ago, which is the 196.62. That had 69 million shares. What she is doing is she's building cause to get down to the 195.43 level. That is the swing low from the 17th of July. NASDAQ composite. We take a look at the composite. What we had with the composite is this. Composite tried to get to a high, couldn't handle the price, had a contraction of volume. That's pretty, it's really wild looking at the indices out here. They're all in harmony, even though the NASDAQ composite is up. Why? Because the composite went up with lighter volume, couldn't handle the high of yesterday, which was 4470. She did get over the downdraft of the 25th, which is 4457. That would have been more bearish if she closed underneath that. She closed under the highs of yesterday. That's still a bearish signal. If we take a look at the 3 Qs, what you have with the NDX 100, inside the NDX 100, sideways market did 35 million shares. That 35 million is going into the 29 million. She's going to need a lot more to get to higher price. After the close out here, YELP, Yelp. Yelp closed at a price point of $75.60. She's trading at $78 right now. This equity had already got smoked. This equity's down from $101. Let's see what they have to say. They see full-year revenue at $372 million to $375. The second quarter net revenue was $88.8 million. That is higher than the estimate. The estimate was $86 million, and they see third quarter revenue coming in at $98 to $99 million. The second quarter earnings per share, they saw a loss coming in of 3. Bottom line is that they made 4 cents. So that's a big number, no doubt. Akamai Technologies, AKAM. Akamai closed at $60.73. That is trading at $56. That's $56.63. She's down quite a bit. Let's see what Akamai is looking like. Okay, so this is going to be a small ABC structure on the way down. She's taking out a B point. She's going to have the volume. Numbers go like this on Akamai. The revenue is up 26%. Their revenue, the estimate was $472 million. They took in $476. The estimate was 55 cents. They took in 58. Bottom line, they made their numbers. Market's still not digging it. Pretty wild. Let's take a look at Whole Foods. Whole Foods closed at $39.11. That is trading right now at $36 or $37, down $2. Take a look at how this is set up right now. Oh man, the Whole Foods getting smoked. Woo, baby. This is going to be intriguing to see what's going on with Whole Foods, isn't it? So check it out. So Whole Foods had a beautiful run from $4.20 in 08 up to 65. She's at 37 right now. Huge volume. Oh man, this is going to be destroyed. Holy cow. Okay, so you're at 39. 31's the next stop. You know, we'll see what she shakes and bakes down at 31. But if she's coming down to 31 with this type of volume, this is going to be such a heads up, man. This is something you want to watch, folks. Why? You have volume off the high with volume. You have price destruction off the highs with volume. It looks like you get a monster ABC down. Man, oh man. Yep. We're not, and now, this would just happen. After the close out here, this would just happen. You just got back inside the lower range. The lower range is $38. What that sets up, it's going to first set up 31 to 22. You break 22, guess what? Whole Foods is going to be down to $11. And as one of our tigers say, Mark in the Den, at $22 a pound for bone-in chicken breasts, People are not going to pay that. That's a fact. I can. There's no doubt. We actually went. I went up to. We have a Nature's Food Patch around here. That we have a Whole Foods. No, we have a Whole Foods in Tampa, I think. But anyway, $22 at. No, it's not, Mark. Because I don't believe this. Because I actually did pay. I did try some chicken the other night, and I think 3 pieces cost me $20. I thought, yeah, that's pretty sick. I know. Right? Had to try it. Who knows? Did it taste like lobster? No, it should have tasted like lobster. Too much. Bottom line is that after the market closed out here, so you got Akamai trading down, you get Yelp's trading up. We have the market itself, folks, okay, the force out here is pushing lower. Gold market out here, gold held up well. Bonds, let's go over to the bond market. Okay, so 10-year bond first is what you have. We did 171.7 million contracts. That's big numbers, no doubt. The swing point on bonds, and this is going to be, it's going to go after it tomorrow, 124.16 to 123.26. We'll see whether it gets an expansion of volume and tries to breaks that baby out. It has to get there to talk, walk, and squawk. 30-year bond, we take a look at the 30-year. What you have with the 30-year bond is this. 30-year is at 137.16. You did 489,000 contracts. That brings it back inside the lower range. Once you got back inside 138.10, and the 30-year, though, is going to need a lot more because the 30-year, it's pretty close. It was going into 420 at 137.23, 136.21 is what it's going to go after. And on each of those cases, it means you have to almost do exactly what it did today. And hey, we'll see. We don't have to speculate on whether it's going to do it or not. Bottom line, we're going to know tomorrow whether it's going to do it, whether it's going to push into those levels with expanded volume. Some of the high volume stocks you had out here today, we had Bank of America up 24 cents. Genworth Financial, that got smoked. The insurance costs are going up pretty dramatically. I guess that was down 222, is trading out at 13.98. U.S. Steel, what a monster that was, up $5.36, over 15% at $33. Let's go over and take a look at X, which is U.S. Steel. She put this on a 10-year monthly. This is an equity that no doubt got killed. It went from $196 in 08, really never made it back up to $16. Has this expansion now. In fact, she took out a swing point. She's at 33. Yeah, she wants to go to 41. There's some action there in U.S. Steel. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming back with our man, Mr. John Logan. Don't forget, folks, we broadcast every trading day, 8 a.m. in the morning. John kicks us off to 6 p.m., all live content. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials finished down 31. You had the NASDAQ up 20, S&P's off a couple bucks. And as we do each and every Wednesday at 20 past the second hour, we get our man, Mr. John Logan. And, folks, John kicks us off at TFNN each and every trading day, 8 to 9 Eastern Standard Time. Now, you can get all that programming right on your cell phone, TFNN.mobi. If you'd like to get the audio, you want to get the full-blown TV, folks, all you go to TFNN.com. On the right-hand side, you're going to see the TV playing. Hit that button. You can get the charts. You can get John. You can get all of us 24 hours a day. It's live content from 8 a.m. till 6 p.m. Now, as you're over at TFNN, you know, John, each and every trading day has been putting up a video on the right-hand side. It's a free video. Check it out, folks. He had Boeing up there today. The bottom line, check it so short. It started out with one video, but guess what? You have a whole hour of videos with his market profiles. John Logan, what's going on?
Hey, Tom. Good to be with you.
You too, man. You too.
It's kind of hairy times right now, huh? A little volatility finally in the old S&Ps.
Thank God.
No,
I mean, that's what we need. And you know what's amazing, folks, is that what you do have, and this is an indication, and this is what happens at lows and highs, you have a couple basically larger foreign currency desks that are thinking of closing. And I read that article yesterday, John, right? And I said to myself, oh, this is good. This is just what we need. because what you have, folks, is that even in the currency markets, I think they've been volatile, but compared to what people have been used to in the currency markets, these haven't been volatile. But as soon as I saw that, I said, you know what, here we go. And, sure enough, the dollar's moving, the pound's moving, the yen's moving. That's what it comes down to. So,
well, let's take a look at the euro while we're talking about currencies. Then,
yes,
I'm going to pull up a chart. I think I'm logged into your den there, and
yes,
I think
I have it right in front of me. Yes, I do.
Cool. So, talking about volatility in currencies and strength of the dollar. That inverse relationship between the dollar and the euro.
Right.
To some degree, I mean, there's, it's like 35% of the dollar is comprised of the euro in an inverse relationship. So as we looked at that relative strength trade versus the dollar and the euro, we noticed actually more strength in the dollar versus more weakness in the more strength in the dollar versus weakness in the euro. And we kind of looked at that as, let's try to take advantage of that relationship. And we have our weekly profiles here that we look at, and these are really cool, quick reads for somebody to do just a quick analysis if they're possibly on the right side of the market or not. And we've got, weekly unparallels at 135.52 that were broken and closed below, as you can see there. And then we kind of traced back up last week, touched that former support, now resistance, and then it was really okay to be short, not okay to be long. And as we look at the daily situation, we got that indication a little bit early, and we've been not advising but just suggesting to people that are following this that we really don't need to do anything from the short side until we see new information appear down here with new profile information. And then we can start trying to adjust the decision process. But as the dollar, as you can see, we're going to pull up the dollar really quick, and just to kind of reference what's going on here, that dollar has showed strength, and right after we busted above 80.31 and then 80.52 on our daily to confirm that. Same situation as euro. We kind of came up, came back, retraced, former resistance, now support, and boom, off to the races. So with these two products acting how they are, and really nothing in the way and no new information appearing, it's really kind of going to be par for the course. Boom, stick with the short trade on the euro and the long trade on the dollar till we're told differently.
This is pretty cool, folks. And don't forget, all these programs are archived. And, of course, John's on every morning, 8 to 9. You can see his profile set up. So when you had just brought up the point about the euro, there's no new information. And, of course, it's been straight down. The dollar's straight up. How does new information, John, get on the chart? How does that work?
That's a good question. We've taken the original market profile concept, and we've had our signal box actually, which is really cool. Now we're actually going to have 1,000 instruments in there by the end of next week. We've got over 250 in there now. But what that really does is it picks up these algorithms that basically we have in the charts, and I'm going to kind of throw that in there and let you see like how it picks out weak instruments relative to profile, strong instruments, lets you sort it. Okay, I want to find things that are just starting to show cracks, and it puts them out there.
There's a lot of red on these filters right now.
You know what? That's what I was going to say. Not to get away from your question, but I mean, a lot of these things are starting to show cracks. Even though the S&Ps are hanging in there.
Holy cow.
Yeah, we got a lot of instruments that are starting to, just roll over. I mean, I got a couple picked out we can talk about. Philip Morris really has just started, rolling hard, and we talked about that this morning and yesterday. But taking a look at how does this information automatically get on you? You don't have to adjust anything. You basically just going back to the dollar here, looking at the chart.
Yes,
this is an automatic outputted algorithm based on market profile theory and where we think these profiles should be in place based on some momentum type information that we look at. And basically gives you supply and demand areas and a fair auction to work with where prices are considered to be fair to each other. And when that particular area is breached on the upside or downside, and that's when you can kind of leverage some situations and know that hopefully you're on the right side or wrong side of the market. Again, it's an automatically outputted set of information that we use in, as you know, everything. Our automated trading systems, our prop traders, personal trading. We talked about an option trade you and I earlier that was based on that.
Right.
So it's it's information that we feel is invaluable, and you kind of set it and forget it. You don't have to adjust it ever again, which is the neat thing.
What I love is that it's not only the ease of use, but the numbers are right there, meaning that where you should be basically putting on the trades, whether you're going long and or short, and where the stop should be, folks.
Yeah, I don't like to feel stupid. Sometimes I do, I think maybe, but what it does is that if you are looking at this information and you are long and you're below profiles on the time frame that you want to, I mean, it will make you feel stupid. You know, it clearly makes it black and white what you're supposed to do if you submit to this information. You know. So.
Yeah. Man, it's a lot of red out there, man. That's
you know what? That's a whole nother show that we could go into. But I mean, most of the S&P 500, that index value is really heavily weighted by those literally few stocks. And if you look at the average stocks or equities that are out there, they're not doing good.
Well, you know, it's amazing what John just brought up, folks, and I remember this, you know, so much in the 90s, because what would always happen is that exponentially there were so many equities that were up so high and the indices are up so high, but it was only because there was 5 or 6 different equities that the weighting structure was up so high, so people would always be complaining and say, hey, the market's up 30%, but I'm only up 15%, or I'm up 13%. And that's the correlation now, too. That's, you know, people are going to be wondering why they're down at the end of this quarter when the market is still higher, you know, or at highs. Let's put it that way.
It's creepy.
It's wild. Listen, folks, don't forget, tomorrow morning, right here at TFNN, check out John, check out the charts, whole ball of wax. John, you have a great night, safe night. Look forward to the show tomorrow.
Thanks, Tom. You too.
Awesome. You stay right there, folks. We'll come right back. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Come right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished down 31. Nasdaq up 20. S&P's off $1.50. And, numbers-wise out here, you get Wells Fargo is up 56 cents. She's trading out at 52.10 right now. And, Wells Fargo, folks, has been one of the strongest banks out there, technically and fundamentally. This is what you have out here today. We go back, you take a look at the April downdraft in Wells Fargo is 46. That's a high volume low. And guess what's still sticking out there is the February 5th level at 44. So check it out. What do we have? Well, you came off the high of 53, 53.05. You're not down much. You're only down 52. What you have, however, is that you have another high volume low that's basically hanging out here from the 17th at 50.61. You try to get it to higher price today, couldn't handle it, closed flat. I suspect the financials themselves look like that's going to be a small ABC structure on the way down. And if we do get the financials to start cracking, because if we look at the XLF is still hanging at its highs out here today, had 39 million shares, which is not bad, by the way. It's been up at these levels since June 5th. Actually, you can make the case that it's been up at this level since March, because we're at 22.88 and we were at 22.49 March 1st. We take a look at Bank of America, BAC. Bank of America right now is at 15.58. They're trying to get a deal closed with the government, and what that is all about is that can they basically get the mortgage deal done, and how much are they going to pay, and are they going to have to pay for the sins of Countrywide? Because there's no doubt that in Bank of America's case, I can see why they're pushing back about why they should have to pay a fine for Countrywide also. You know, Countrywide, no doubt, was a huge fraud. The thing that's amazing is that the guy's name, bottom line is that we haven't heard from him, but he got away basically lock, stock, and barrel. Some of these people just disappeared. He's one of them. And the bottom line is that the amount of fraudulent loans that went through Countrywide was absolutely amazing. But when you take a look at the aspect of what was going on, the government, you know, there's no doubt Bank of America should have been smarter about it, but the government almost made Bank of America buy Countrywide. I mean, it was that bizarre. So it's something that I think all of us can learn, that when things either are going south or whatever is happening, and if you are dealing with anyone, make sure that you get the contract. You're dealing with the government, make sure you get about a dozen contracts, because all the rats are going to basically run off the ship and say that, no, you know, it's not this way, it's not that way, whatever. The bottom line is that they're used to stretching the truth in fact, just trashing the truth in about 2 seconds. You know? And so it's one thing being there, it's another thing when it's over and, in fact, folks get money coming back again. You know? So I suspect that's going to be going on for quite a while, meaning how much money is going to be paid. You had Bill Gross out here today. In fact, what is he saying? Let's see. This is from PIMCO. And what he was talking about is that he felt that the amount of money that has been made in assets is going to basically change at this particular point. You know, we'll see if that is, in fact, what is going to happen. But let's go over to McDonald's. McDonald's lost a case today. This is kind of interesting. So you're going to hear a lot about this. This has to do with the aspect of franchisees. Are they responsible for the folks that work for them, meaning work rules, and is the main company also responsible for them? And McDonald's had been fighting this case, and they lost the case today. And, you know, hearing all over the news that the fact of the matter is that this will change the franchise rules. I don't know a huge amount about the case, but what you do have is this. This is what is pretty wild when you do, you know, just look at it from the outside looking in, is that McDonald's and large franchisees like this, they're large corporations that do franchising, their franchisees absolutely have no control, zero control. I mean, one of the largest ways, folks, that the actual companies like McDonald's make money is that they make money by selling huge amounts of product to the store. They definitely direct what type of software the store uses, what the rules are, what the signs are, all of the above. You know, and there's no doubt that the franchise operators are having a problem with this today, and the corporations are having a problem with it. I don't, and I'm sure it's going to get appealed, but I suspect when all's said and done out here, what you're going to have is that, you know, in fact, if you look at most franchisees' materials, they're telling you inside that material that, yeah, you're a franchisee, but guess what? That is almost in name only. So it's going to be wild watching how this whole thing shakes out. And what are the ramifications for that business? I'm sure they're going to get around it. I just don't know how they're going to get around it yet. They'll get around it. If you learned anything inside the texture of taxes, accounting is made to get around, folks. That's what it comes down to. You know, between the tax inversions, there's a million different ways to get around it. In fact, if you well, at any age, but if you're in school right now, what you want to get your head wrapped around in a huge way is get your head wrapped around that math, get your head wrapped around the different rules that apply inside the government structure as to what expenses are, what income is, and what are the programs that are available out there that, in fact, you can either get tax credits or you're going to be able to legally write off amounts of money. You know, depending which city you're in, there's a huge amount of money right now, folks, if you're a small business. There's a huge amount of money out there that is on a tax credit basis for hiring people that you can take it off the bottom line at the end of the year. And many of these programs, now this is what is really wild. Many of these programs, you can actually be in a city and just move in that city and still get the credit, which is just bizarre. But guess what? That is in these economic programs that were put in place in 2007, 2008. They're still in place right now. So the exact example would be like this, whether you're in Boston, Colorado, California, Florida. You know, I don't know how it is in there, but I know how it is in Florida. And I've read enough of these that I believe the law is the same if, in fact, you have an economic development area. And what it is, let's say you have 5 jobs, whether it's in Boston, Colorado, Denver, Florida, Tampa, St. Pete, and you moved. Those 5 jobs, as long as they made a certain amount of money, you'd get credit for those 5 jobs. And, in fact, that credit would be a tax credit, you know, coming down to your bottom line. So there's a lot of different programs out there that you can take advantage of. You know, of course, the large corporations are basically taking advantage, and, you know, you hear all day long, is it fair, is it not fair? Well, of course it's not fair, okay? GE, I remember the statistic a few years ago, actually, in 2006. I believe GE had over 200 people working, just working, in their tax division. 200 people. Why? Because what happens, folks, is that you can move around assets legally, pay the least amount of tax that you can, but what you do have to have in place is you have to have that full paper trail as to why you're moving the assets, where the assets are, what the assets are valued at for you in order to basically have a clean paper trail that and a business purpose. That's crucial inside of all that. But guess what? When you have 200 people that know the tax code upside down or parts of the tax code upside down, that is a lot easier to do than you and I out in the street, you know, basically saying, okay, what are the tax rules and what we can do? The point of talking right now is make sure that you get your head wrapped around it and do it. Why? Because if you're in business or even, you know, you're basically an employee, there you want to basically get every dime that you're entitled to off your taxes on a continual basis. And once you start really wrapping your head around what the benefits are out there, you'll do this more, because you got to remember something. For every dollar that you can save to the bottom line, depending what bracket you're in, that is going to be a lot of less gross that you actually need to make more money. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Some of the high-volume stocks in a low-volume market. Your Genworth Financial down 226. Microsoft is off 30. U.S. Steel up $5.36. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Excuse me, folks. 877-927-6648. We're going to have a lot of these gold miners coming out with numbers, folks, after the close today. So tomorrow morning, you're going to see them out here. We can start off with an Eagle that's going to be coming out. You get an Eagle is looking to make 28 cents. The range thus far is the estimate's 28. They claimed earlier they're going to make from 21 to 37. We'll see what they make. You have Gold Corp. That range was from 11 cents to 18. There, the estimate is 14 cents. We'll see where that shakes out also. And as to gold production, Gold Corp is looking for 659,000 ounces. They're still claiming a cash cost of $5.17. I really don't expect that it's $5.17 when you're talking all in. And all in, folks, would mean that you not only get the gold, bottom line, you fix the mine after the fact. New Gold is looking to make 2 cents. They're looking for, let's see, 92.8 thousand ounces of gold. They're looking for that to come out of the ground. What's going to be interesting here is that New Gold, too, has a 4.5% short position. El Dorado, that's looking to make 5 cents. Their range is 2 cents to 6 cents. They're looking at 186,000 ounces of gold. If we go to EGO for a second, we take a look at this. What you're going to have is you're at 756 right now, and there's a couple of these. Well, many of these gold equities are really strong, folks. If we take a look at El Dorado looks like it is basically set up another ABC structure on the way up. It had already taken out its swing point from 749. It, had some juice under the move, needed more volume, pulled back, went after it again, meaning only 4 days ago. We did 4 million shares at 4.9. Still going to need more. Guess what? Pull back today with lighter volume. Pull back into the 4 million area with only 2.6. Rejected lower price. And let's see, I think they're coming out after the close today. Yeah, they're coming after the close today. Many of these gold companies, they come out late in the day. And not quite sure why, but then people can't trade them. You can trade them tomorrow morning. But I suspect what you're going to see here, if we do take a look at El Dorado and a few of the others, El Dorado looks to me like it's off the bottom. We don't own this one. I do want to get a pullback in it. This has been off the bottom of 557. You're at 756. And what you have out here, you have a couple different swing points. The first swing point is 959. That's laying out here. The second one is a high swing. It's a high volume swing also. That is up there at 1562. So we're going to see some action out here in the next few days. What we do have is this. The Fed meeting is over now. You're going to get the GDP, folks, come in this morning, 4%. That was great for the quarter. There's no two ways about that. Bottom line is it's not going to help in the aspect of where we are for the year, however. What it has done is put volatility in the market. The jobs number is Friday, but the ADP already come out. The ADP come out at 218,000. And it doesn't mean that the ADP is accurate, folks. What it has done, though, is this. If you look for the larger trend, what we have done in jobs the last 6 or 7 months is that we've stayed over 200,000. That's a good number. That's saying that employment is going to continue to go higher. And as employment continues to go higher, the real key is going to be, will there be any pricing power inside the employment area? Meaning, can folks quit a job, look to get another job, and not worry about it? My take is that we're in that area right now. That's starting to happen right now, that folks realize that, hey, I can go somewhere else. I want a raise. I want this. I want that. And we'll see how prevalent that is as we move forward, or, in fact, what could put a squeeze on this really quick, and this is where it gets interesting, and this is where the dynamic comes in about that, okay, if we're doing good, bond rates go up, market comes down. What do you think that will do to everything else? The market comes down, folks, people get nervous again. What has happened in this market, however, and this is where one of the problems lie, is that if you haven't owned assets in the last 5 years and you're looking to make an expansion of wealth on the amount of money that you are getting paid, that's a very hard thing to do. Why? Because it's the assets that have gone up more so than any of the pay grades that are out here. And what has gone up, and this is no doubt, the things that we need, meaning food and energy, have gone up. They're high. That's the bottom line. The inflation rate is still low. Will that change? I suspect it's not only going to change. I think people are probably getting squeezed more than that rate of inflation is looking at this particular point, because that has to do with the amount of income that you have that is disposable versus the amount of income you need to basically put food on the table for your family, to keep them warm, and to put gas in the car so you can go to work. Those three things right there, when I look at the basis as where we are right now, have been going up, and they've been going up, and they've stayed high for quite a while. The real key is going to be in the type of food that you're eating. What does end up happening right now, folks, is that so-called good food, when I say so-called, I think it's good food, meaning that whether you're talking vegetables or whether you're talking, meats that are decent, they're not grass-fed, whatever, they're very expensive. If you're talking McDonald's, you can get fast food very inexpensively, and hopefully we'll change that aspect of getting away from a fast food nation to a nation that basically starts taking care of your own body, because I was listening today I had a lot of healthcare programs on, healthcare CEOs on CNBC this morning. And the key is, folks, is not to mask the problem or to take care of a problem after the fact. The key of basically having a quality of life is the key to live better so that your little machine, meaning your body, takes care of you. Because that's all we are, is a little machine. You take care of your machine, it's going to take care of you. We know at some point it's going to break down. That's just how it goes. Every day we're closer to death, right? That in a good way. I'm not saying that. I'm just saying that, as you go forward, that's the reality. So the reality should also be, what do you put into your body, to take care of yourself? Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Don't forget, at TFNN, 8 in the morning to 6 in the afternoon, all live programming. If you like the programming, please tell 3 people. Have a great one, safe one. Talk tomorrow, folks.